GM. GM. Today is Friday, the 10th of May. Daily levels. So, there's not really much to say about the lower time frame stuff. Bitcoin had a green day yesterday. After 3 days of red. Doesn't really mean much. It doesn't make it bullish. It's not really bearish either. Above 62.6. Short term is bullish. Or at least it's not. There's no breakdown when it's above 62.6. And above 64 it's high time frame bearish. And above 64.8 it's completely. So if you take the first all-time high of 2021 and use that one, 64.8, that's where price is consolidating below. And if you look on a weekly perspective, you can see that, right? I'll actually hide these so you can see that clearer. When you look at Bitcoin like this, it's quite clear where we're at. In 2021, this is when the parabolic move actually ended. Right, this was Bitcoin's blow off top, massive move, big rally, up only, and then afterwards this was a corrective bounce. As you can see, up, was not parabolic, was not impulse led. It was more corrective. Bounced up, dipped, bounced up, took the highs and went down. If you're looking at that on a lower time frame, you just think of that as a range starting to form. No trend. It trended through the range. Yes, it went up from 25 or 28 to 69, but it wasn't the same impulsive bull market trend. Also, the on-chain data, the weekly RSI, and a host of different measures, Google Trends, the interest levels for crypto, they all peaked here. They all peaked in April, in February, March, April. So that was the top for Bitcoin specifically. We then came back up, wicked above it, but couldn't hold. So clearly 64 is the level that's important. Couldn't get above it, couldn't hold, led into a bear market, went to new lows, formed a bottom, peak fear, and then ran all the way back up to that same level, to that same 64, got above it, got above the old all-time high, above 69, distributed, fell back below, now we're below for 1 week, 2 weeks, third week in a row, unable to break back above it and retest it, retesting it bearishly as we speak. I think that 64.8 is a more important level than 69, because people use that 69k level as that's the top. You use whichever one you want, but below 64 it's really not good. It's just not bullish. This is a range trade from the low to the high, breaking above it, falling back inside. And so Bitcoin becomes undeniably bullish again, obviously, with the next all-time high. Because when you take out the range high, you don't tend to reclaim, break out again, and then consider that to be still a bearish level. In fact, if we did see something like that, you would see it break out, probably retest 64 on the other side, and then away it goes. And I fancy something like that as a decent potential path if we don't go lower, where we take the highs, because the range low holds of where we're at now, right? 60k holds, we've taken the lows, people trapped at the bottom. If it consolidates in here, it pushes through to the range high like that, takes out 70, everyone gets excited, drops back, holds 64, and firmly flips it from whatever it is right now, which is definitely not support, and it's low time frame resistance, into a support, and then away we go. This is backed up by the volume profile, where 64 and 67 are the two levels in here that have the most activity. And of course it's the breakdown level, which we haven't reclaimed. It's where the daily bands are, or where they're dropping lower now. This the 50 EMA. All of this stuff is below 64 and needs to be flipped. And so 64,000 on the dot is the number for the volume, and then 64,800 is the actual previous all-time high. Depends which exchange you're marking it across, but I think as long as we're below that, we're bearish. Simple. And there's not a whole point. It's not a whole lot of point reading too much into it. You know, as we turn back on these, where are they? Yeah, some of these levels here. And then the pivots below. So that pivot has played all the way since 2021, 58k. And so everything in here is just pretty directionless, but the more time it spends here, the more likely it is to be just distributing lower before losing that level. But still, between 58 and 64, it's just chop. But if you spend that time in here and then you reclaim 64, if it spends a lot of time here, like another few weeks, and then reclaim 64, I don't see a need for this breakout retest. I think that reclaim of 64 would probably just lead to new highs. But again, that's an if and a but, and it's a while away. So on the lower time frames, I'm just looking at it and I'm saying there's nothing going on here. The strong selling has been all week. It's just consistent selling, I should say. Alright, consistent selling from 64 or 65 down to about 60, just above 60. We've had just a reaction bounce, too much shorting, too much aggressive selling, bouncing back up, and just consolidating sideways. There's literally nothing to say here. Market's not moving, nothing happening. So I won't say anything more there. ETFs continue to have no demand after a couple of days where they did. And that's really it. Market's in one of these kind of holding patterns. You can see it on total 3 as well when you're looking at alts. Right. It's just sideways, as it has been. Could go up, could go down, could go up and stay up, could go sideways. It's a thoroughly uninteresting market right now, which is what I expect because Bitcoin volatility has been decreasing. As you can see here, there we are. Since the highs in March. If I go to a weekly, it might be easier to see. Right, Bitcoin's volatility has reached the same peak it did back in March of 2023 during the crisis. And obviously Bitcoin's price topped out in and around there. And since then we've been in this range. Volatility's been drying up, dropping off. And I expect if volatility continues to drop off, we're going to see prices drift lower as well. Because volatility is needed for price to keep going up, at least at the levels we're at. It's been shown in history that Bitcoin, when volatility dries up, it means interest is drying up. Right? Volatility is just how much something moves. If Bitcoin is moving less, people have less interest. If people have less interest, they don't buy, obviously. And if they don't buy, it's hard to sustain the price. It's hard to keep the price up. Low volatility when price is down is fine. Low volatility when price is down is actually bullish. Like, if we're in a bear market and you get low volatility towards the end, that's people giving up. That's like time-based capitulation. But when Bitcoin's price is at extremely high levels, which people don't think it is, but it is, right? We're at levels currently which we were at 2 months ago. People are acting as if Bitcoin could never be here. Like, the kind of rhetoric I see online is that this price is too low for Bitcoin, but it's only 2 months ago that we reached this for the first time, right? Go back 10 weeks ago, we were in the 50s. Go back 12 weeks ago, we were in the 40s. Go back 4 months ago, we were in the 30s. Well, 5 months ago, we were in the 30s. 4 months ago, in the 40s. Like, Bitcoin's price is up significantly. And there was generally high volatility along the way. The low volatility part is where you have the breakout and then you have Bitcoin kind of grind higher. That's a really, really nice early stage move. But as we started to get to the highs, that all disappeared. There was none of this steady bid where it's just getting bought up. Steady bid, grinding, buying, ETF buying. This is where volatility increased, right? This was lovely, nice, steady buying. I see that everywhere in here as being really your place where big buying was happening. Mostly over here, it was front running the ETF, right? Then after, it was the actual ETF flows. And then this is kind of where the FOMO phase started. You see this where instead of just grinding up and consolidating and holding nicely and not moving in a straight line up, it just 3 days shot up, and then volatility really started to increase. As you can see this with the deep wicks, the immediate retraces, every dip getting fully bought up, pumping to the highs, dropping off, bouncing, big wide bouncing ranges, and then it just starts to dry up. And volatility now is compressing and going to the other side. And so all the volatility up here is indicative of distribution, not accumulation. This isn't perfect, but the way you want a trend to go is nice and smooth, right? You want a trend to move up like this, quite orderly. But when you start to see volatility at the highs, that is distribution generally, because it's a change of character. The thing that got you there was nice, steady, grinding price action, which tells you what? If you have nice, steady, up, dips get bought, up, dips get bought, it's generally big accumulation, bigger players buying. But more so, it's telling you that the market's moving up in a nice, orderly fashion. And then when that changes, it means something has changed. Whenever it goes to high volatility, it tells you whoever was here doing the orderly buying, they're either not there anymore, or if they are there, they've been joined by other speculators. And then you start to see big wild swings. Wild swings cause more emotion, as you can see here. There was very little emotion here, right? It was grinding up. It was grinding up. It was grinding up. You got a little bit here when the volatility came in. The sharp decline got people emotional. They started to grind back up again. And then everything above this pump up to 60 and then 69, it's all been super heightened. If you've traded the last 6 months, you'll know this. This last, call it 3 months, has been far more polarized. There's been far more changing of opinions. There's been far more reasons where people are, why is it this, why is it that? You've obviously had meme coins and altcoins going crazy. So you've had kind of a flip-flopping of bias on Bitcoin every few days over the past few weeks. But at the same time, you've got the shitcoin casino going from 100x to minus 90 to 100x to minus 90. And that usually resolves with low volatility. When you have the high volatility, it tends to be followed just like a trend. Goes up and then goes down. Volatility goes up and then it goes down. And we've had volatility go up, and now volatility is going down. Do they have BVIV on this? They do, right? We had volatility going up February into March, and now we have volatility going down. And when it's going down, it tends to go down for much longer and stay low. As you can see here, you get spikes of volatility followed by sharp declines, and a spike of volatility and a sharp decline. Now these were the ends of the bear market, but even here, throughout March, April, May, June, July, this was all while Bitcoin was doing that really bullish, really nice 25k to 30k before the breakout. That was all here. Volatility died. And if you remember at the time, it was a bad time to trade generally. You really got one move in June when BlackRock announced the ETF and we shot from 25 to 30. Other than that, it was very low time frame trades or no trades. And so I see that as being where we're at right now, like somewhere like here, where we've had our little spike of volatility when it tried to break the lows, reminiscent of that. And there's probably a further bleed of volatility to come. Because volatility is the lifeblood of markets. Like this, you can't just have high volatility all the time. Especially not Bitcoin, like people misunderstand as well. Everybody agrees Bitcoin's volatility is dropping over time, and yet they're upset when Bitcoin goes sideways for 6 months like it did in 2023. But that's what it's designed to do now. It's not Bitcoin of, although this doesn't go back far enough, but maybe BVOL has it. Right? We're not in Bitcoin of 2017, where volatility is just fucking extreme. It can't be this. This is what a volatility chart of an altcoin would look like right now. Bitcoin has gone beyond that. 2021, it started to compress. 2022 and 2023. Look at this. You look at that and look at all the volatility we had. Bitcoin hit all-time high without volatility ever having huge spikes. And that shows the maturing of the asset. And if you understand it through the lens of volatility, you'll know that Bitcoin's volatility actually should make new lows. Right? The path for Bitcoin's volatility is to go here. When? Don't know. But it should make new lows. Bitcoin should not be able to have increasing volatility. Otherwise, that probably means it's going down a lot and down very fast, not up. Because you saw it. We're at the lowest Bitcoin volatility ever, and we hit all-time highs. Lowest ever. Right? Made new lows, and looks like it's never going to hit the 80s, 90s, 100s, which is a good thing. But it also means that when you get those little bursts, like we got in February into March, and that little burst at the start of January where it shot from 16k up to 30k, January into March, those bursts are the price appreciation. That's where it happens rapidly. Then it goes into a phase where volatility disappears until it comes back again. And you'll see like how price looks when compared to that. Right, as we have those spikes of volume, spikes of volatility for BTC here, which is where you get your biggest price appreciation. You get Bitcoin going from, to drag this up a little bit so it's easier to see, we get Bitcoin's price rising. And really I shouldn't drag that up because I can't get the whole thing in. I'll try and make this easier to see here. Right? And you get your little spikes. It doesn't need much. A little spike in volatility is able to take Bitcoin up on its legs up. And a little spike of volatility, certainly relative to the past, and it's able to take Bitcoin up into its final level. And then volatility dries up, usually for quite a while. Right? After this peak, volatility really died for 28 weeks. After this peak, volatility died for 13 weeks. And so far, we're about 6 weeks in to this current one. And I think volatility is probably going to continue lower or sideways or just not increasing for several weeks, if not months more. And then you get the next spike, and that's where Bitcoin probably takes its next leg. But we've had 3 legs. You can see it quite clearly here. If you view it through the lens of the volatile phases, we had the first big push, 16 to 30, 16 up to 30. We had the second big push, where we broke out, 25 really, to about 40, 45. And the third push took us from 50 to 72. There probably needs to be a lengthier phase where that compresses now before it's able to go again. And so that's it. Right now Bitcoin is rallying up. I'll talk about it on Trade of the Day. But that's it for the levels. GM.